Hello, and thank you for joining us for today's MacDesk Floor Report. I'm Rebecca Darst from the Market Access Center, and we are about to close the book on a volatile May trading month. In that regard, the bears are making their presence felt until the bitter end. We arrived at the trading floor this morning coming off of a 1% slide for equities yesterday on the continued disquiet out of Europe. And initially it looked like we might catch a break in the absence of any new rattling revelations out of Europe. European stocks settled in a holding pattern after the euro-dollar currency cross bounced a little off the latest of a series of two-year lows at 123.58. Much to our chagrin, over the 8 a.m. hour, however, it was a raft of disappointing U.S. data points that prevented any kind of meaningful relief in the futures. And we are currently down about 80 points in the Dow. Here's a rundown of this morning's numbers. Right off the bat, we had some alarming new figures on company layoffs with the May Challenger Job Cuts Index, which showed a 66% increase year over year, with employers planning nearly 62,000 payroll cuts. That's the largest figure since last fall. Job cuts were strongly skewed to the computer sector, with cuts there coming in at 5 times the amount in the next leading sector, namely transportation. The May ADP employment change showed a gain of 133,000 private sector jobs in the month of May, but analysts were widely looking for a gain of 150,000, and the prior reading was revised lower from 119 to 113,000. That is some analysts that we follow looking for tomorrow's May non-farm payrolls number to come in softer than the current 150,000 consensus number, although one analyst in particular has noted that the ADP number has fallen short of NFP every May since late 2008. So we'll be anxious to see how tomorrow's number shakes out. Weekly jobless claims showed a 10,000 claim increase over the prior weekly reading, which was a little higher than the range of analyst expectations. This morning's pre-market data feed also delivered the second read on Q1 GDP. This came in at a reading of 1.9% against a prior 2.9%. This was more or less exactly in line with the analyst estimates, but generally not supportive of any meaningful recovery momentum. Then at the top of the 10 a.m. hour, we had a surprising miss in the Chicago Purchasing Managers Index. The May Business Activity Barometer dropped to a reading of 52.7. Analysts were looking for a slight increase to 56.8. Instead, the market was served with the biggest drop since September 2009. This sent gold prices to their session highs, sent the price of WTI crude below $87 a barrel, and the yield on the U.S. 10-year note down a full 5 basis points to 1.57%. On the whole, not a pretty picture on the data front. On the corporate news front, however, we had a bevy of retail comp sales numbers out this morning. The same-store sales numbers were truly a mixed bag. Our very own Charlie Brown has been following the numbers all morning. He says the general trend has been a tough read, although higher-end retailers have been somewhat weaker than the market was expecting. Companies that beat tended to benefit from a later Mother's Day, earlier Memorial Day, and warmer weather. The VIX, meanwhile, is up nearly 4% in early trade, and that has brought the volatility index back above a reading of 25. Last time we closed above 25 was mid-December 2011. So here's to a better June. Let's drink to that, shall we? For additional market insights, be sure to check your inbox at 1 p.m. for the midday. For now, that's it for me, Rebecca Darst, for the MacDesk Floor Report.